Hi there, and welcome to the Paula Fiscal Show. My show airs at 3 p.m. every Sunday on Channel 29 and 76. You may also watch all the shows on YouTube by logging into Paula Fiscal Show. If you have any issues or comments that you wish to make, please do email me at paulafiscalshow@gmail.com, or you may also use the Twitter handle, which is Paula Fiscal TV. We want to thank our sponsors, Gypsy Rosalie's and Ursula Marston of White Rose Boutique in the West Portal area. We want to also thank Pat Lakey of San Francisco Investment Development, who does post-production. And we also have Chef Sharon Lee, who is a chef in this area. The Curtin Pacific Institute for Criminal Justice is also a sponsor of this show. So once again, thank you for joining us. And for today, we're going to continue our series of finance and banking on yourself. We have a special guest today who has experience not just in the finance industry, but has also been an event producer, and he's an actor at the community college, and he has a repertoire of many other things that he's done to get him to where he is today. So I want to welcome Mr. Rafael Musni, who's going to tell us a bit about how he ended up being in this finance professional world of...
Absolutely, absolutely. I was very fortunate in that when I was growing up here in San Francisco, my grade school, St. Paul's, right here in the neighborhood, actually brought over a banker and taught us about banking and savings and helped us open up banking accounts for 25 cents.
You mean to say the career days really worked for you?
I think it was just to show us how to pay attention to business and how money grows. But you could call it a career day.
Was that here in San Francisco?
Right here in San Francisco. So I went to St. Paul's Elementary on Church Street, the same church you see in Sister Act.
Nice.
And I learned about finance there as a sixth grader.
As a sixth grader, that's wonderful.
And then, of course, I went to St. Ignatius, which furthered my financial education because as part of the juniors and seniors classes, we have to take a basic business finance course. So
that's interesting. That's the private schools, though, that did that specifically.
Absolutely. It's a private school with an emphasis, because it's Jesuit.
Right,
They want you to learn.
Exactly, exactly. So let's talk about some of the other careers that you had before, such as your event production career.
Yes. For 15 years, what I did was work with a company, and our specific mission was to help companies that are trying to raise money for their clients, such as the San Francisco Film Society and such as Glide, raise money in a sustainable fashion and a responsible and ethical way so that they could do their mission. So our job as event planners was to create a great amount of excitement, but also make sure that the money coming in actually went to the people that you think you're spending your money on. And that was an exciting world. It's a little bit like film production.
So when you're doing this event production and you're lining people up to write checks for your charity, is that all done by computers, or do you use an algorithm, or how do you determine who your best targeted donator is?
Well, oddly enough, it's all personal. I mean, yes, you can organize with the computer, but it really is person to person, phone call to phone call, meetings over coffee, maybe meetings over dinner, sharing the mission, and aligning the values, because if someone writes a check to you, they want to know that they're getting value for their dollar.
And do you think that this experience then helped you go into your current career of being a financial professional with a certain unnamed company?
Absolutely, absolutely. What many business owners find out is that the most important ingredient of their business, the most important practice, is networking. And it's the one thing that no business school actually offers as a course or a class. You learn it on the job.
And your networking that you developed during your event production actually carried right over into your financial industry?
Absolutely. Sometimes I still network with the same people. And the skills themselves, they just become part of your practice, where you introduce yourself to people, you find out what they need and what they want, and you try to align your services with what they need. It all comes down to values. If you share values, there's a very good chance that you're going to be able to do business with one another and help each other.
And when you're trying to match up values, so to speak, do you find that sometimes your values are distinctly different from what it is that someone is searching? And if so, how do you deal with that?
It's actually common to find that your values are different. Sometimes that's a result of where you are in business or where they are in life. If they're very young and they really want to take lots of risks, and you're not a risk taker as a financial professional, maybe you're more on the safe side, that might not be a great relationship at that time. But I always make it a practice to keep in touch with people because values change over time, especially as people begin to gain experience. They realize, maybe I should have a little more professional advice in my...
Professional? Yes, professional advice. That's why you're here. So why don't you share with us a couple of the tips that you have learned in this industry that can help the rest of us decide whether or not we need some of these services?
Absolutely. Actually, one of the tips is something that I learned from my father when we were building a house over on 3rd Street. I used to think that if you needed services from a vendor, just call them up, get a price, get a quote, and either write the check or not. My dad insisted that I would physically go and see someone and stop in their store, stop in their place, try to find out a little bit about them before we start talking about any business. And I still do that to this day.
Is that called due diligence?
It's called due diligence. It's called trusting your gut. How a person interacts with you before you are a customer is how they're going to interact with you after you're a customer. So I encourage people to actually meet their financial professional and to actually have a gut feeling that this is the right person.
So the primary service you offer?
Absolutely. When I sit down with a client, the first thing I want to do is to gain their trust. And that's really through an interview process. I need to know what they care about now, what they may care about in the future, and what their immediate goals and needs are.
So what are some of those questions that you ask?
I ask them actually what's important to them. What is important to them? Oftentimes they'll say things on the surface. My business is important, savings, retirement's important. But I dig deeper. I ask them, what have they done? Why they've done the things that they've done. Maybe they've started a process of saving or investing or retirement, but I ask them, is it actually working out the way they think they wanted it to work out, or is it a little weak in some areas, or is there something that they've left unattended? Because we all have good intentions, and then there's the actions which may or may not match our goals.
Well, what about all those services, for example, that the banks offer? When you go in, they now have a, like the Bank of America has the Merrill Lynch person sitting in there telling you to open a SEP IRA or a simple IRA or a KEO. With so much information coming at you, how does one determine what really is best for you?
This actually goes back to my first piece of advice or recommendation, is that you actually get a gut feeling check. Sit down with that person. If they steer the conversation very early into products and solutions, I would be concerned that maybe they're a little more focused on their needs rather than your needs. You have to be confident that they are interested in you.
So are you telling me that most of these financial experts get paid on commission?
Yes, actually, right now in Washington, there is actually a new rule to try and even out those commission structures. There is talk about changing that rule back to the old requirements. We'll see. We'll see how that works.
And the commission's similar to, say, a real estate commission of 2 1/4, 3 1/4, or does it run into 10, 15%?
No,
how does that work?
It's actually about the same. So those commission structures have been leveled off to all be somewhere less than 4%, about 3.5%.
So it is Similar to the real estate industry the agent gets when you sell $1 million piece of property.
Yes, if you're talking about certain investment products, but not all products, are commissioned like that. What the person should actually be concerned with is what is the product or what is the solution doing for them? And is it a holistic solution, or is this person that they're working with just they only do one or two things, and they're not interested in holistic planning, which should take you from where you are now to your ultimate goals, and maybe even a little bit beyond.
Let's look at an example.
Okay.
Say someone has saved $15,000 in their IRA. How can that be converted, or should it be converted? Should it be rolled over? Say the person just reached the age of 62 and they have $15,000 in their IRA. What would you recommend to them?
Well, first I would ask them, is that everything that they actually have? Or are there other assets that they're holding that they intend to use for their retirement? They might have other things. They might have Social Security. They might have real estate. We need to see if all of these things together are actually going to meet their expenses. Because it comes down to income and expenses.
And when you're doing this with someone, so are there actually charts or fill-in PDFs that people fill out, or do you do this on an interview basis, or can we do it online? How does that come about?
I actually do it in person on a yellow pad. I actually want to show them how it works. At a subsequent meeting, if it's productive to bring them something printed up and reported that they can follow along with, I will certainly do that. But that does take at minimum 2 meetings.
Okay, so then you don't really rely on the internet and online services. In your industry, you do a one-to-one in person.
It's up close, in person. When I am using online resources, it's for research. What's going on? What is this person looking at if they're looking at investments?
And what if somebody just really believes in the stock market and all they're doing is playing stocks like they're playing poker?
Well, I can still help them. I can still set up accounts for them. The conversation I would have with that person are all of your eggs in that basket? Maybe we should take some of the gains off the table and put them someplace where it's safe no matter what happens in the stock market tomorrow. In other words, do you have some brakes with your accelerator?
But isn't the word safe relative?
It is relative.
So how do you explain to someone what is safe and what isn't?
Well, it depends on what they already have.
Right.
And how risky or how liquid it is.
Okay.
So if it's highly risky and not liquid.
For example?
For example, real estate.
Okay.
If someone calls you on Friday, and like your mother, and says, I need some money, well, maybe real estate is a great solution long term, but can you get any money out of it?
Is it liquid? Can you push a button and get cash?
Yeah. Can you have money in your hand in 3 days?
That's what you're referring to as safe.
Liquid.
Liquid. Okay, so we want liquid.
So for liquidity, you have to look at other things. Things that can be easily or conveniently or without great penalty transferred into cash in your hand to solve problems. Safe is relative. Safe would refer to, is the gain dependable? Is the principal protected? The stock market relatively produces a gain, but as to whether it will produce a gain or experience a loss next week, that's anyone's guess, and no one can see the future.
Exactly, exactly. So then when you're doing this with a family or a person, do you bring in all of the family members, or do you just normally deal with just one of the family members?
I often try to start with the principal. Or sometimes I'll even ask them, would you like this conversation to be with everyone that we're talking about, or just you and maybe your spouse initially, and then we'll bring in the family members? I leave it to them, because they ultimately make the choice, so they ultimately have to guide me as to what would work best for them and their family.
So are there any other aspects of the interview that are important for you in discussion with people?
Absolutely, absolutely. I always take a little homework and give a little homework. I often find that during the interview process, people start to unearth things that they're not quite sure about what they're talking about, or they're not sure of the amounts. I say, can you please research that for me? Because I'm not going to know unless you tell me. Other things are things that I can look up. So I also have to do a little homework on them. And then we meet at a subsequent time and try to look for some solutions that we both think are going to work for the long term.
Well, let's talk a bit about the products. So tell me about the difference between a term life insurance policy and a, what is the other term? Pure?
Whole life.
Whole life.
Whole life.
Whole life.
Or
Okay.
some kind of permanent
Give us the
policy.
difference. Just give us the plain difference.
The plain language difference. I think the difference between a permanent policy, often referred to as whole life, and that's the most popular permanent life insurance, and term life is the difference between renting and buying. When you rent, once you strike that contract, you have the right to stay in that place as long as you keep paying for it. And at the end of, say, 10 or 20 years, you don't owe any more money on it, and they don't have to let you stay there anymore. With owning a home, paying a mortgage, at some point you make that last payment and you own it outright. The same is true for a permanent whole life policy. At some point, you will own that contract outright.
And then once you own it, is this where you can start doing that dance about banking on yourself?
Absolutely. That's when you can actually start to access the cash value, or in some cases the dividends that the company is paying you, to have available liquid cash to deal with the other things that you want to deal with. Maybe you have an emergency, an opportunity, or maybe even a supplemental income for your retirement.
And when does it start to pay dividends?
Well, for our company, the way it's structured is that dividends are payable on the third year.
The third year that you have the whole life policy?
Absolutely. Dividends start being paid on the
So
third
it's like
year.
a savings account.
Some people do liken it to a savings account, and that's not a bad way to think about it.
And does it pay more than the savings accounts do at the banks?
It certainly does. It certainly does.
How much more does it pay?
Well, that's not a rate that I should actually state.
Oh, you can't? Does it vary according to the amount?
It does vary, and
Okay.
no one company can actually promise that we're going to pay a certain rate at a certain time, because
How does it determine then? How is
It's
it?
determined
Does
by-
it vary according to the CPI, or does it vary according to the stock of the company that you're with? So you really have to be careful about picking your insurance company.
absolutely, absolutely. It varies because every company declares a certain profit at the end of the year,
Yes.
and the dividend is based on the profit that the company develops that year.
So you don't get it every month. You only get it once a
Once a
year.
year.
You get it once a year dividend.
Correct.
So there are other companies that work like that. Other insurance companies, like State Fund, works like that. The State Workers' Compensation Fund. They send out dividends at the end of the year.
Correct.
And I'm always shocked and surprised when I see that in the mail. I say, "Whoa, we're getting money back." It's $41.35. It's like a big deal because you normally don't get anything back from insurance companies. And isn't that part of the PR issue that goes on with insurance companies? A lot of people don't like insurance companies because they think that they're betting on their own death, and so they're against insurance. But that whole life insurance sounds like it's a different animal, like it's a different package. Explain a little bit more how that works.
Okay, well, one of the differences you want to look at when you're looking at different life insurance companies is, do you want to look at the fact that the company is, how long it's been around? You also may want to look at, is the company held by stockholders? Because stockholders obviously would have an interest in taking profits from the company and putting it into their own pockets. As an investor, that's part of your job, to pick companies that will bring profits to you. As a mutually owned company, you're looking at a company that is taking its profits, putting it back into the company, and with any excess, saving money for emergencies, and then with excess on top of that, dividing that up among the policy holders that own products from that company.
Interesting, interesting. So how, as a consumer, can we learn, for example, how many members are receiving dividends from particular companies? Is that public information?
Yeah, that is public information, and you can do your own research. The state insurance website is a great place to start. Every state manages the insurance companies in their state. That's a good place to start for anyone doing research on this. And also reading the company literature as to how their dividends are and their profits are distributed.
And so what do we look up? We go to the insurance website?
Yeah, california.gov
Okay.
is a great place to
And
start.
then we put in, for example, Charles Schwab,
Well, Charles Schwab doesn't.
sell insurance.
Right.
Okay, so we put in, for example, New York Life.
You could put in a company name like New York Life and look up their ratings. Also, you can go to the rating services for insurance companies. There are 4 companies that rate insurance companies.
Independent, outside auditors, reviewers, certification people,
Exactly.
accreditation people.
Yes, and the names of those companies are, there's Standard & Poor's is an excellent one.
Yes.
There's not Morningstar, Standard & Poor's, Fitch, Moody's, and Standard & Poor's. And I just forgot the last one.
Yes, okay. So there are 4 companies that do this.
That do this,
and,
exactly.
And then they actually put a gold star on
they do
one
they
or
do
2
a letter
gold
grade.
stars. It's a letter grade, okay.
So D, B, double B, A, double A, triple A.
Okay, so what kind of company are we looking for when we're trying to determine where we're going to put our money?
I would look at double A and above, and that's a very short list.
Double A and above,
Double A and
it's a
above.
very short list.
Yes.
And so when they're getting these standards, what goes into the analysis for them to determine that these companies are higher rated than others?
What the rating companies look for is fiscal stability. They want to see that the company has enough money to pay everyone that it owes money to, or everyone that has a claim against the company, and extra, because the company would need extra money during a fiscal crisis.
And is there a way we can check to see how much claims or how many claims a company has against them?
Yes, you can look at every company's annual report.
So that if I wanted to look at this, I'd have to download every company's annual report of 400 pages.
No.
Is there anybody that does the research for me and I can just read their article?
That would be Standard & Poor's or Fitch or Moody's, and they would have a short list of those companies, and you can check their ratings.
So I'd have to go online and join their email list so they could send me their reports.
You can just look at it online, and you can download it if you like. And also, if you meet a representative of that company, they should be able to provide that for you, even on the first meeting.
That's great. That's great. So the whole idea of this show is to share some of the resources and some of the tips when you're looking at trying to determine whether or not you need either whole life insurance or term life insurance, or if you need a double A or triple A or a Dun & Bradstreet rated company versus a small mom and pop. But we don't want to disavow any of the startups. What about the startups? Are there a lot of startups in this industry?
Not too many that I know of. It takes a lot of money to actually
So
provide
there aren't
the
any
security.
insurance startups for this financial industry.
I haven't heard of any in the last few years.
So most of the companies have been around for...
Well, I know some companies that I've looked at have started in the 70s. I've looked at other companies that started in the beginning of the 20th century. I chose a company that started in 1845.
Oh, I see. So you did your research and determined that this was the best company for you.
Exactly.
So we want to thank Rafael Musni for sharing with us some of his background and how he determined he was going to join in on this particular company. If you have any financial questions that you have that you would like to have answered on this show, please do email paulafiscalshow@gmail.com. And Rafael, would you like to give an email or phone number that people can reach you at?
Absolutely. If someone needs to get in touch with me or has a question, please find me. My telephone number and email address is at rafaelmusni.com. That's RAFAELMUSNI.com.
And then, you know, before we close, I always like to ask you to give any of our viewers a couple of tips if they want to go into the career that you chose for yourself.
Absolutely. I would first invite them to actually just meet with me. I'd be happy to have a cup of coffee and give them the ins and outs of the industry as I understand them. And also, I'd be happy to talk with them about introducing them to other people who have had a great experience in this industry.
My show airs at 3 p.m. every Sunday on Channel 29 and 76. You may also watch all the shows on YouTube by logging into Paula Fiscal Show. If you have any issues or comments that you wish to make, please do email me at paulafiscalshow@gmail.com, Or you may also use the Twitter handle, which is Paula Fiscal TV. We want to thank our sponsors, Gypsy Rosalie's and Ursula Marston of White Rose Boutique in the West Portal area. We want to also thank Pat Lakey of San Francisco Investment Development, who does post-production. And we also have Chef Sharon Lee, who is a chef in this area. The Curtin Pacific Institute for Criminal Justice is also a sponsor of this show. So once again, thank you for joining us.